Hi, I'm Steve O'Hare from Acuity Signal Centre, and it's the 19th of December. It's Monday, and this week's market alert is US30 or Dow 30. We're going to go through the different timeframes on the technical side of things. Then we're going to dive into the new sentiment to see if we can pick up some information from there also. So, take a look at the weekly chart. The big impulsive move higher from the start of the pandemic topped out at the start of this year. 3rd of January, we had the high of the year. Since then, we've been in a corrective phase. Now, over the last month, we have had an attempt higher, but it looks to have failed. We had a formation on the weekly chart. This three candle formation is an evening doji star candle or evening doji star formation. This was followed and invalidated a week later when we had a spike higher up towards the 78.6% Fibonacci retracement level. Now, the reaction from that topping out has been quite aggressive to the downside, and we've broken lower yet again. On the daily chart, there's some interesting support areas that we've got to keep an eye on. We can see that we had the downtrend, 1, 2, 3, 4 points, and eventually broke up through it. We've come back and we're currently retesting that downtrend line. So it's a reverse trend line, and you can see the lines underneath. We've got quite an interesting formation on the moving averages. Now this is what's known as a golden cross, when the 55-day moving average is crossing over the 200-day moving average. They're moving in a similar direction. 200 is moving sideways, but the 55 and the 100-day are moving higher, and this is quite a positive technical signal on the moving averages side of things. However, the last 4 days of price action has been pretty negative since we made that high on the 13th of December. So we're looking to really test these support levels. The previous swing low came in at the 10th of November. The low there was 32,405. It looks like we're going to test that area. That will be the 200-day moving average, so there should be some support from that. And this could also almost be a potential retest of the trend line before prices move higher. We're all thinking about a Santa rally. Let's take a look at the 4-hour chart. We're negative on the 4-hour chart. We're below the Ichimoku cloud. That gives us a good idea, and it looks like we found our level of support for the last 24 hours around 32,620. Really looking to see how that finishes off as we approach the close tonight. So on the new sentiment analysis, we've had yesterday we posted a bullish market alert, and from daily news sentiments perspective, it's moving higher, and in 70% of the last 10 occurrences, price has risen within 4 days. There's a 70% confidence factor in that we see higher prices within the next 4 days. Now, it doesn't look like it today. We're on the back foot today, but it's Monday, start of the week. We've got a long way to go. We are in negative territory if we look at the 7-day EMA on the new sentiment side of things, trading at a negative 0.16583. But we can see the buy signal here, 70% rating, and we can see that new sentiment over the last 24 hours has moved positively, moved from about 30% to just over 50% more positive on the new sentiment side of things. So that also may give us a little indication that although we've got off to a slow start this week, there is potential for further upside in the Dow 30. Now, if we're looking at the downside, let's take a look at the daily picture, really look for those price points that we can look to test over the coming days. The main area of support, 31,700, after we break through these moving average support lines. And on the upside, obviously, we're just looking for anything higher than Friday's high would be positive on a closing basis. If we can get that on a daily chart, that will signal a reversal in this short-term pullback. So a number of reasons to look at this current downward move as a potential opportunity from the long side of things. Okay, hope that's helped. Thanks for joining me this week and look forward to seeing you again next week.